Like the music?
Yeah.
All right. What's going on, everyone? Welcome to the midnight show. I mean, I don't know. Do we really need an introduction, Mr. Chris Jameson Patel? And
Nah, man.
what?
About to send you this New York City
All right.
wallpaper.
Oh, look at this guy. This guy's so ready for IREN. Technically, IREN is today if you're on the East Coast. It's tomorrow for me, but yeah. Send over the New York City background. We're about to get all New York up in this piece right now. So, Chris and I were both from New York. So, wait, are you from New York or you just lived there for a while?
Yeah, bro. I grew up in Brooklyn. Hell yeah.
There we go.
I grew up in Carroll Gardens, and then I moved to Red Hook before it got really gentrified.
You lived in Brooklyn?
And yeah, my entire life. I went to Murrow for high school, Edward R. Murrow High School.
Nice.
Yeah.
Nice.
Yeah. So
nice.
I've been there forever. Yeah, it's definitely, the city's changed a lot since I was okay. I'm gonna send you the website that has the thing. All right, here we go.
We're about to get New York up in here. Wow, beautiful.
Why don't you show people? Let people choose the
Okay.
the one.
Sounds good.
I have the one that's on the second from the bottom, second from the right, the one that overlooks the Manhattan Bridge. So if you scroll down.
Wait, Manhattan.
No,
this one or?
I see something different.
Oh yeah, because you just loaded it.
Yeah.
Oh man,
it's that one right there. The one right below that one. Not below that. The one next to that. There you go. Yep, that's the one that I have.
Am I allowed to do this?
Yeah, you can download it.
It's free.
It's free. Yeah.
Oh, it says download free. All right, cool. Yeah, guys, we're about to get New York up in here. Let's go. Wait, yeah, look at these IREN people. We're not even talking about IREN in this one until the end of it, and it's not going to be that much. All right.
That's right. See, Sam's becoming good at Sam is becoming good at figuring out how to keep engagement. See, if you go and blow your load on the first thing that everyone wants to talk about,
of all metaphors you had to use them.
Listen, I don't know. You're disgusting. I'm a normal person. Hey, listen. Yeah.
Oh, beautiful.
See, I love that. I love that view.
Dude, I love New York, man. I love New York. I don't like the weather. I hate the weather, but I love New York.
Would you ever move back to New York? I think we had this discussion before.
No. I was thinking about it for a minute and just like, no, because I got to bring the kids and everything with me, and just I got to go to school again. I got to pay. Private school in New York is seriously expensive. LA is expensive, but private school in New York is crazy expensive. No, I'm not from Seattle, but I love to visit Seattle when it's not raining. What's up? This dude from the BX. That's what's up, man. What's going on? Which part of New York is that? This is, I'm thinking this is. So if it's overlooking the Manhattan Bridge, I didn't get a good look at it. Oh, this is from Queens.
That's Brooklyn. That's the 59th. Yes. I think that's the 59th Street Bridge.
Wait,
that's the 59th Street Bridge.
And that's not the Manhattan Bridge. It's a Queensboro Bridge.
Is it? Yeah. You're right.
Yeah, because wait. My bad. No. You're right. This is the Manhattan Bridge.
Yeah, 59th Street.
Yeah, this is Manhattan. That's Lower East Side. So that's not 59th Street. 59th Street is Queensboro Bridge. So this is Dumbo, or down under Manhattan Bridge.
Oh, this is not Williamsburg.
No. Actually, Williamsburg is in up part of Brooklyn, but Manhattan Bridge. Is this a Manhattan Bridge? Yeah, because the train is right there, and that's a World Trade Center. Yeah, this is a Manhattan Bridge.
Yeah, 59th Street Bridge. That's what it is. 59th Street.
No. Manhattan Bridge is not 59th Street. Manhattan Bridge is Lower East Side near.
Hold on a second. NYC map. Let's see. Hold on a second.
How do I hide us?
I don't know. Let's see. Okay, so here you've got the Brooklyn Bridge, right? That's that's not the Brooklyn. This is the Brooklyn
There you go.
Bridge right here.
Dumbo.
This is the Manhattan Bridge, right? But this is the 59th Street Bridge over
The 59th Street is
no,
Queensboro
this is
Bridge.
Roosevelt. That's Roosevelt.
Yeah,
What's
so
this? This one is Williamsburg. So it's Williamsburg then. It has to be Williamsburg.
Oh, you might be correct.
Let me see. 1 second. Let me see. You could see.
I know. I'm looking at it right now.
Yeah, it's Williamsburg. It's the Williamsburg Bridge.
Oh, dude, I used to take that bridge so many times too, coming to the city.
Yeah.
Wait a minute. Are you sure that's?
Yeah, it's the Williamsburg Bridge, man. You can see it from here. See?
Oh yeah, you're right. Because I see another bridge in the background. You're right. You're right. But that's not that goes into Soho.
Yeah, Chinatown, right?
Yeah. Chinatown.
Yeah.
All right. Let's get on to the show. I only have a solid hour to go here. Okay. Man, we gotta do a meetup in New York one time, dude. I feel like all these cats are gonna buy us all these drinks and we're all just gonna get blitzed. Oh, what's up, Jose? What's up, Jose? What's going on? Good to see you here. Yeah. Oh, so wait, hold on. Was this guy at the Robinhood earnings today? I wonder if he was at the Robinhood earnings today. Nas? Nah, just that Robinhood. Okay, so let's get into it, guys. Just some housekeeping real quick. Chris and I, we have not done this stream in a few weeks, probably more like a month. So it's going to be good to kick it back. So we're probably going to be very distracted because, I mean, honestly, Chris and I have to catch up a little bit anyway. So we'll make this nice and chill. What are you drinking tonight, dude? You just drinking water?
Coffee. Just coffee.
Oh, wow.
Yeah, man. I gotta stay. I gotta be awake. I think we have slowly kind of veered away from each other's investing a little bit, in that you have been focused on a lot of short-term growth momentum things.
Yep.
And I've been looking for those value oversold companies with strong fundamental plays. But I think that's good. That's like a nice balance, right? So you don't want to be completely in value and you also don't want to be completely in growth. So you're kind of like coming together, unless of course we have one of the companies we're going to talk about today, which has both, which is Meta. But
Meta is something we definitely need to talk about. That one. I kind of want to get a Novo Nordisk, but maybe we can hold that one for later. The first thing that I wanted to talk about, which I think it's most relevant today, is Duolingo. But just to address something. So, I mean, you got to remember, like 80% of my portfolio, I don't really touch too much. And a lot of that are things that I bought early and just holding. And the other 20% is like what I'm having fun with right now. And really, like, there are so many names in the market that are just running right now momentum, like leading the freaking market, like just no joke, like 10% of every day. And that's the data center stuff. You know, you already know that I have Nebius for a while, but like some other names like IREN and CIFR, like, dude, these names are such a strong narrative right now. And then there's other names that I'm also playing as well in the short term, like Vikings Therapeutics, which we can talk a little about later. And another thing that I'm looking at is either Novo Nordisk or Duolingo, but I honestly don't have any cash right now. So like I would have to sell something. And I already know I'm going to be trimming my some of my next position to get back. Well, not get back, but like go hard in TOST. And I'm looking at that chart, and the chart looks pretty good. But anyways, let's jump into Duolingo real quick. And I know this is a really hot topic on Twitter right now. While I'm bringing it up, do you have like any thoughts on Duolingo or anything?
Yeah, I mean, the challenge with Duolingo is that it's got slowing momentum when it comes to user growth. I mean, it's a much more mature business, right? So it's one of those things that you're going to have to contend with. The amount of people that are going to be using Duolingo, you know, over time, it's going to be harder and harder to get new users. So unless they create some adjacent products, you know, they're due for some level of pullback. Now, that doesn't mean that's a bad company. You know, it doesn't mean that they don't make money. So it's transitioning from growth to value, right? So if you look at its EPS, EPS is up, right? So what's the issue here? And then, but the market, if you are in it for growth and all of a sudden growth is slowing down, people are gonna question that. And if they question it, they're gonna sell it off. So it's very similar to a lot of other companies who have done exceptionally well based on that growth narrative, and any deviation from that growth is going to see a complete reversal in the company in the other direction. So I don't know.
Yeah.
We'll see what happens.
So the interesting thing about this was that I look at the earnings, like I look at this forefront, because I didn't really get to really dig too deep into it, and we're all going to do that together with each other. But I look at these, they beat the top line. The bottom line actually should not have a check mark. It came in line with expectations. I'm going to pull up fiscal.ai to see what the segmental metrics are for these.
I was way ahead of you. Way ahead of you. I already did that.
Oh, okay. Yeah. Go ahead. Go ahead. Share your screen, and then I'll throw it up here after I finish this. But I mean, this isn't bad. And a lot of people think the company was already cheap heading into earnings around the 260s level. But I didn't bite again. Like I bit before and I got out because that was a short-term trade. But like this one, like, I thank goodness I did not buy before it, but it does pose an interesting setup now. So I'm going to share your screen now.
Yeah. Wrong screen. Sorry. Let me just correct that 1 second. Screenshot. I have to share my entire screen. Okay. There we go. Yeah. This is the biggest, in my opinion, this is like the challenge that they have right now, which is look at their 12-month trailing. Now it's kind of flattened out, right? So you can see the growth.
Do you want to zoom in real quick?
Yeah. Me full screen. 1 second. Where's the view thing? Zoom. There we go. Can you see that?
Yes, that's better. And which metric is this?
Okay, so this is just top line. This is just top line growth. So
which is good. 39% for a profitable company is really good.
No, I totally agree. It's definitely good. But then when you look at that segment's KPI that you just said, which is monthly active, what is it? The daily active users? Was it? And if you look at percentage of daily
active user, and also monthly active user.
Yeah, we'll put both of them up. Look at that downward trend.
So law of large numbers.
Yeah.
Okay, so hold on. Go down.
Okay. I mean, monthly active users is now, the growth has gone to about almost to 20%. And daily active users is down to 35%. So you were literally 2 years ago at 65%. Now it's 35. So the number of people utilize, like additional people going down. I mean, we could look at the paid subscriber count too, and that's declining as well. Like the growth in paid subscribers.
I'm going to pull up something on my end because I want to see how this looks like on the change, and also, so I'm going to pull up daily and monthly, and I'm just going to share this one. Okay, so I'm just going to unshare yours real quick.
Yeah, that's fine.
All right, so we got this right here. This is their monthly active user, which is light blue. And this dark blue is the monthly active user change. And the dark bar is the daily active user. And then the light line is the daily active user change. And I do think that this is just the law of large numbers. But let's go back a little bit, all right? Because last quarter, it was this quarter that was kind of the inflection in terms of the stock price. Okay, so it was March 2025 was when like it kind of topped, and that was like when it just started its downtrend. And what we noticed here was that, and I think the market was kind of forward looking on it, right? So if you look at this trajectory up. Everything is just ever increasing, right? Actually, let me get a better view because I don't like the fact that it's.
Yeah, but even then, Sam, I mean, bro, you're talking about a company who's still, even after the sell-off, has gone from literally last quarter, they were at 266 PE. Now they're at 32 PE.
I get that, but when you're
So
growing
if
at
you're
40%, it's just when you're growing at 40% and when your earnings are growing quickly, especially in this market, we're trading like 23 PE on a trailing basis. Like these things kind of deserve their excessive valuation. And I'm not
no, I
saying
agree.
it does in the long term. I'm just saying like in this current market, you know,
Yeah.
you got to kind of take a look at that as well. And I'm not sure when they became profitable, but that also is dependent as well. But I think this is what I think happened. Okay, look at this upward trajectory, and it's like the market saw this, and then they looked at the comps because the comps are going to be what matters for the next quarter, and the market probably front ran it. I was just like, I don't think they're going to beat their comps, or I don't think they're going to do well on their comps, and they didn't. Look at this, they didn't.
Yeah.
And it dramatically slowed down when you look at this. And look at this over here in the next quarter. Like it just slowed down. And then I think the market liked this. Remember, it liked it because it saw the guidance. And then the open AI thing came out. And it was just like, oh, let's sell this B off from like 450 all the way down to like 320 in a matter of a few hours.
Yeah.
And then this quarter came in, and I'm like, I mean, this is still good, but then unfortunately the comps are getting harder.
Yeah.
So I think this is the reason why it's falling, not because of the fact that earnings weren't good, but because the market is so forward looking. It's like, hold on a second, guys. If you can't beat these comps,
the next year is going to be even more difficult.
It's going to be hard for you guys. And if you have competition like OpenAI, you have competition like Google, which I think that those two things are kind of a bit overdrawn on the story. Because if it's anything, that might take a while. Plus, let's not forget, Google was in the same situation where they were just selling it off. And that was like a ridiculous example of what happened, right? Like, obviously you were in that, right? I'm not going to take credit for that. You were in that the whole way and you're still in it today. So congratulations. But like the market was running off of fear of future damage to its earnings. But the difference is that Google kept showing up on its earnings. In this case, Duolingo is not showing up. So I think that's the reason why this is dramatically get sold off. But you're also coming from a very expensive valuation. So I think that might have to do with it. And just like hearing myself analyze this, I'm not so sure if this is a buy for me. Well, just like kind of thinking in my head, like, I don't know.
It will be eventually if you believe in, look, if you believe in Duolingo, like long term, because at this point, you just went from being a Momo trader to a long-term shareholder. Like that's how a lot of these companies are, right? When they're in the growth phase and they're going higher and higher, everyone's chasing it. Everyone's like, oh my God, this is the greatest thing. And fundamentals be damned. No one gives a crap. Fundamentals don't matter.
In this market, no one cares about fundamentals.
Right.
They really don't. This is a Momo market.
Yeah. Until they start mattering, right? Like that's how it works. Like, so what tends to happen is first you get the guys who are nonstop, like, hey, let's get into growth. And then the growth misses the high expectations. And all of a sudden now this is a bullshit company and they all start dumping, right? And then who picks up the slack? It's the value guys. The value guys always pick up the slack afterwards saying, wait a second, this is a profitable company. It can buy back shares. It's got great margins. So it really does translate into almost like this game of catch where like the Momo guys will, like take the ball and throw it and the value guys will pick it up. And then eventually you'll get that nice long tail going forward. I mean, a good example of that right now is something like what happened with Robinhood. Like today, Robinhood reported, and it was down 5% after hours.
No. Robinhood's they're gonna be green tomorrow. Get out of here. Those earnings were great.
Dude, I saw those earnings and I was like, whoa, that is crazy.
Go ahead.
No, it's just, to me, I looked at that and I was just like, wow, this thing did amazing. I thought the market would reward it. But dude, I feel like this market is like an Asian parent. Like, and if you've got nothing but straight A's going forward, like if you didn't get an A++, the market will sell you off, right? So like everyone is looking for a fucking reason to sell Robinhood right now.
No,
Like
I
they're just
know.
like, they're
It
looking at this
is.
and they're like, that's the thing. It's the same thing with Palantir. Palantir did really well on its earnings.
Those were
If you look
amazing
at those,
earnings. But
and it got sold off.
I'll be
And
honest
it got
though,
sold off.
Palantir made its move before the earnings. I think it made its move for the earnings, and it's trading like where it was last week, right? And even Robinhood, even if it's down 5%, which it's not if I'm looking at the overnight, it's doing pretty good. It's like almost flat. Even if that's the case, like, dude, the thing was up 5% today. Like it's not really a big deal, right? So, and I'm biased. I don't own Palantir, but when I think about the trajectory for Robinhood in terms of growth, revenue, constantly expanding their moat by going across multiple verticals and releasing products in new verticals that they haven't even explored yet, I think the potential for Robinhood is much more vast from here than it is for Palantir. Now that's kind of debatable because Palantir is like the definition of software AI, right? And this goes with like the valuation doesn't freaking matter with Palantir because if the market is bullish in AI, you have to be, the market is bullish in Palantir, period. Right? Like Palantir can't be below $100 and the market's at all-time highs. I'm sorry, that just can't happen. Like they would have to be a material and adverse effect on the AI theme if that happened. And if that does happen, the market will be down. It's not just Palantir. Palantir will be down a lot, but the market will be down as well. Like it's like NVIDIA, right? NVIDIA dropped like 2% in the last 10 minutes of the day, and the market fell off a cliff in the last 10 minutes of the day, right? It's like you can't have these leaders in these themes fall. Like the major secular themes, like not data center is not a major secular theme. The theme is AI, right? So NVIDIA it's got the software and it's got the hardware. It's mostly hardware, but they're transferable into software from CUDA. And Palantir is all software, right? And those were really good earnings, but like, yeah, why did it sell off? Well, it went on a big move, and is it going to sell off more? Probably not. If the market
but that's why you have to ask yourself, like, look at IREN, look at Cipher, look at these, over the last 12 months, the best return has not been Palantir, has not been NVIDIA. It's actually been the hyperscaler, like the data center thing, like Nebius, right? So the thing is, when you're in this market, you have to look at that base too. It's not just about, hey, you know what, I think this is a great company with great earnings. It's also like, where are you starting from as well? I mean, that's the definition of being Momo, right? Where you're trying to get something that no one else is recognizing and get in so early that you can 5x your money. And that's the funny thing, because I speak to some people and they're like, Chris, how come you haven't found anything that 5x'd yet? And I was like, I don't know. I'm just not that kind of
What kind of questions are these? Like it's as if like anyone can find something that can 5x, because
you did. Shut up, bro. You did. You found a bunch of them.
But it's not easy to do this stuff. Like, are you kidding me? Like if I could easily pick something at 5x, then everyone would be rich. I'd be rich, but I'm sorry. Like I'm doing pretty well myself, but I'm not like filthy. I went long Google with spreads, or I went long the cruise line with spreads. Like I'm not like cruising it like you, like no pun intended. But dude, I am a good part of my portfolio is writing momentum stocks, and it's based like 80% on technicals and also positioning, but the other 20% is based on the current theme in the market right now, and that is just data center, like all out data center. So hold on a second. I wanted to
one of the things whenever I see like Amit and these guys, they have like an earnings live show and they try to rationalize like stock market moves. I'm like, bro, there's no rationalizing any of those numbers. I don't know where you guys are coming from thinking that you can rationalize this market. You can't. It's literally just, how do people feel? You're more likely to outperform this market if you are in touch with vibes. Like if you get the vibes and you get them early enough, you're gonna crush it in this market.
I mean, a good part of my portfolio is running on vibes. I am running on. I'm literally running on like, look, I'm seeing what's working in the market, and it is data center right now. And buying all dips when it comes to, like, it does not go down. It does not go down. And the thing is that you just have to be strategic with this stuff. You know, like,
you got an exit strategy? That's the real question.
Do I have an exit strategy? The market will tell me. Like, but it's just like, look at this.
That's what I'm saying. It's outperformed NVIDIA
performance. Yeah,
throw
look at the
NVIDIA
6 month performance, dude. Like, this
NVIDIA
is wild. NVIDIA in the last 6 months, NVIDIA is up 70% 70% in the last 6 months.
Yeah.
Nebius is up 367%. CIFR is up 700%. IREN is up 1,000 freaking percent. And I can't do the 3 month chart in this, but I bet you the 3 month chart is where all look at this. Look at this. Yeah. Not even 3 months ago.
Look at all these idiots that bought NVIDIA and they didn't buy IREN.
There you go. Right here. Yeah. So, I mean, I said it a while ago. I was long NVIDIA from like $500 until like 1,100 or something. And then I ended up selling the last batch at like 1,400. This was pre-split. And I never got back in NVIDIA after that, because then you had other things like Astera Labs was on a crazy run. Micron was on a crazy run. Arista Network was integrated. So like, these are the names, like NVIDIA has its run, but the thing is that there's so much more to this theme that's just wild, that the market will just go crazy and they'll just bid it up. Like, look at Astera Labs, right? This thing was I still remember back in like April and May, this thing was trading like around $50. And I was like, this is ridiculous how this is trading $50. NVIDIA is one of its largest clients, and they literally build critical components for the networking between all these GPU clusters, right? And all of these servers. This is super important when it comes to this. And the market sold it off, right? And this massive run that it had from $50 all the way to 250, like, dude. And then look, would I buy it again? Probably not, right? It made its massive move. Like, this is the stuff that I kind of look for when it comes to the short-term portfolio, these type of moves. And, you know, I don't want to put the idea out there that this is all that I do, but I mean, this has provided me the most alpha in the portfolio. But like, then there's names like Amazon, which is freaking like almost 20% of my portfolio. Like, that is a story that will never die, you know. And I know you and Steve talked about that the other day, yesterday, right? Was yesterday you and Steve talked about that? So like, what was your verdict? Is Amazon the most cheapest mega cap right now?
Meta is probably cheaper. No.
Oh, okay. So let's get a little bit into Meta. Let's get it. Okay. So your reasoning?
I think a lot of people are scared that Zuck is going to spend too much money on this AI data center build out, and it's not going to have tangible returns, and he's just lighting money on fire. And I'm like, yeah, but Meta's got the money to light on fire. It's not that big of a deal. I mean, you know, his earnings call, I don't know if you have the transcript and you could pull it up, but there was a part and he said, look, it's a bigger risk not to blow this money right now while we don't know what the true potential is. And in the future, if let's say demand is softer than we're anticipating, then we'll just cut back on capex for a few quarters and let the thing, you know, let the demand rationalize itself. I think that is something that we all need to be more careful of, you know. So yeah, if you look at on a forward basis, Meta's the cheapest.
Yeah.
Well, yeah, price to operating cash flow, Amazon's there.
So too, well, this was this was November 1st. I believe Amazon already reported.
So then
yes, they already reported. I did this last Saturday. So Meta's definitely cheaper now. And this is before Amazon announced its OpenAI thing, or OpenAI announced its Amazon thing. I forgot which way it was around. But yeah, this is on a forward PE, and Meta it's the cheapest one because I think it's went a lot lower. So I think it's trading around like 23 or 24 forward PE. And the reason why I brought up price to operating cash flow on a forward basis is because like that, okay, everyone should know that CapEx is calculated into the cash flow statement, but it's not calculated. You see it in the free cash flow statement at the end of it, but you don't see it in operating cash flow. Operating cash flow does not include capital expenditure. That's included in the investing, right? In the investing free cash flow. So this will give you an idea as far as a business goes, how much cash that this business is producing. And Google has amazing operating cash flow. So does Meta, and so does Amazon, and so do a lot more of these companies. But this does not include CapEx. So if you don't look at the CapEx for any of
Wait,
these companies.
just one thing before. So one of the reasons why you want to look at operating cash flow versus just straight up PE is because PE includes depreciation. Operating cash flow does not. So usually when it comes to a lot of these software companies, they do not have a lot of depreciation because they don't have a lot of capital expenses, right? So if you look at Meta over the last 15 years, the depreciation expense on Meta is not that high. But now it is a high thing. Why? Because they're building out all these data centers. So as they buy these chips and build the data center, now they actually have depreciation on there. So what that does is that lowers net income because it's like, okay, we made $6, but $2 of that actually went towards depreciation. So depreciation. So that's why operating cash flow, when you're looking at a business that's capital intensive, is a lot better metric to follow in terms of financial health, right? So if you look at Amazon, if you look at Amazon purely from a PE standpoint, for the last 20 years, you would have missed Amazon completely.
Oh, you would have missed it. You would have missed it.
Yeah, because you would have just said, oh, this is overvalued. The PE is super expensive. Now, on the other hand, if you look at it from price to operating cash flow, and you saw that operating cash flow go up and to the right at an extended pace, you would have said, no, this is the easiest buy of the century. So it's kind of the same thing right now where Meta, its operating cash flows are going up and to the right. Right? As long as the operating cash flows are going up and to the right, the PE is not necessarily the most important thing right now.
Yeah, I brought it up over here. I believe this is the operating profit. So this is the operating income. This will tell you the same story. And this does not look like it's slowing down. It could be slowing down on a year-over-year basis. Like the comps are going to get harder. But you could have said that you could have said that a year ago, and the comps didn't get harder, right? So it might be a bit of an overreaction. However, we don't know what's going to happen next quarter, especially if, let's say, I don't know, let's say advertising falls off a cliff, whatever it is. I don't think it's going to happen. Do I think this is the do you think this is the bottom for Meta? You think it can go lower?
You never know with this business. I don't know. Like if the economy starts to sour,
yeah,
it's
the very dependent on the macro.
Sales and marketing start to kind of like normalize and dip, then you got a problem. So if you look at these guys, right, in terms of, can you pull up revenue, just pure revenue, not operating cash flow? The reason why I say that is because I want to see if there's any periods where the revenue starts to level off and then re-accelerates again. Because usually that's what the challenge is when it comes to like the macro environment for certain businesses. So yeah, and just do TTM. So yeah, you see that leveling off in scroll down. So you see that in December 2021, it was growing all the way through and then it started to flatten out.
Well, that's what everyone thinks is going to happen.
Yeah. Well, that's the thing. If that starts to happen, then yeah, Meta is going to get re-rated down a little bit. But here's the thing. If Meta goes down too much, the company could just slow down its capex and convert more money towards share buybacks. I mean, they've got so much operating cash flow that they could literally issue debt at super cheap prices.
They're already issuing a dividend. They're already doing share buybacks. I don't know why in the world I still to this day I'm just like, why are you guys doing a dividend? Like that's just
probably because they want to pay, because Zuck doesn't want to sell any shares, but still wants to build his super secret high-tech bunker. And
just do buybacks then, like, right? Shouldn't you just buy back more of your stocks to have that superficial, like, hey, look, our EPS is still increasing sort of thing? I don't know. I don't think we were buying Meta for the shares. For the dividends. And I remember they're like trading around $500. The market loved that for some weird reason. But
I don't even think it really cost them that much anyway. Like, how much does it cost? Just put in, look at their cash flow statement and just put in their dividends. Like, how much does it cost how much do the dividends cost relative to their revenues? keep going down. Keep going down. It's
thing.
it's in right there.
Hold on, this thing is just like
common share dividends right there. Perfect.
5 billion. This is the last 12 months too.
Yeah, $5 billion in 12 months. That's nothing for these guys.
It's nothing to them. I mean, I just think that this leveling off was a macro thing. I don't think this was attributed to. I mean, obviously, it did impact the company. Rates were hiked in the fastest it's ever done in history, and everything got hit, right? But we're in a bull market. To say that this is the top is pretty difficult, but say it's the bottom is kind of difficult too, because you see how the market is, where it's like, well, if this thing ain't leading, I'm not going to buy it, right? Like the market has a tendency to buy the leaders. And everyone was complaining about Amazon, how it was basically flat year to date before last quarter. And then now everyone loves Amazon, and Meta might take a breather, Yeah.
Can you do me a favor? So overlay two things on this chart. Overlay revenue growth, right? Annualized, and then also include stock price. Because I think that's what usually happens, right? So everyone is like, Meta's growth engine is broken, and everyone starts to value this thing like a, what is it called? Like a thing. So, and go up.
Yeah, it takes a minute.
Yeah, Fiscal AI. You need some better.
Whoa! Let's not. We're on public channels right now. We don't want to start insulting. I'm just kidding around.
I'm not going to insult them, but I'm going to tell the truth. Now get rid of the revenue.
Yeah. I know it's a little slow sometimes.
Yeah, get rid of the revenue number total.
Oh, you just want to look at that? Okay.
Yeah.
So total revenue. Let me.
No, just use the little I right there. There you go. Yep.
Freaking love this app. All right.
Yeah. So that's, you see that right there. As long as revenue is growing, everyone is always like, yay, I'm happy, this is good. And then once it starts to slow down, everything goes in the other direction. It's the same thing. If you did the same chart on a PE, like add PE on there.
Well, PE is going to be with the price, so of course that's going to show the same thing. I think
right,
what
but
we do want to show is EPS growth. EPS growth is going to tell you the story.
Look at the sharp drop in PE. So it's just literally multiples getting re-rated, right? So
it has to be on a different axis.
Yeah.
There we go.
Yeah. So you see that gray color right there at the bottom? You can see the PE dropped significantly right along there, and that was the bottom
price. This is going to follow the stock price.
But that's what I'm saying, that right now, if you were to tell me, Chris, what would you be willing to pay for Meta, right? I would say, well, technically now that they're at, like, usually this would be a good chart to look at to find like a nice cyclical bottom. But now I would look at EV to EBITDA. So you could get rid of all of this, just use EV to EBITDA. Because I think when you start taking on debt, you have to use EV to EBITDA as a better benchmark, because now what happens is your enterprise value is going to include a lot of that debt that's coming on, right? So if you don't have any debt, then whatever, it doesn't matter. EV to EBITDA is not really going to, show you a big difference. But now that you're actually incorporating debt, which Meta is taking on to finance these data centers.
That was interesting. I did not see that coming. I did not see these mega caps start to take on debt. You're talking about this when we were talking on the phone yesterday. I was just like, wow, I didn't think that was going to happen, but that's happening. The mega first, you saw the SMID caps doing it, and then now the mega caps are doing it. Just like, I don't know. Anyways, it's trading below its median. I mean, we're in a bull market. This is cheaper in terms of where the market's trading at, right? We can't do like a direct correlation here, but like this is cheaper. If we're in like a real bull market, like it's going to keep going, Meta is a good buy right now. The thing is that I'm not like loading the boat in this thing right now. Like this is not a load the boat price.
The way that I would try to value this, like let's say for 2028, is I would try to extrapolate the growth rate that they have for the next, year over year for the next 2 years, and then try to figure out what the share count is going to be in 2 years. And then on top of it, add EV to EBITDA of about 20, right? So, because I think it definitely deserves to be in the 20 range. And if you want to be conservative, do like 18. Right?
I mean,
and
yeah,
that's where you're going to
where the
get.
median is. The median
Yeah.
is around 18. Yeah, there's a bit of
Right.
recovery, but like, I don't know what that's like 10% up from here. Like, is that really pound the table buy right now?
No. So that's the thing. This is where you have to kind of model things out.
Okay,
And this is something that I told the
I'm
fiscal
not.
AI people.
I can calculate it in my head, or we don't have time to do that. But I'm saying like, okay, fine. Maybe your upside is like 25% from here, right?
Nah, it's
On
more
its
than
current.
that. It's
Okay,
more
maybe
than
it's 30% from here. So then, what's the CAGR for that, right? If you think about it in terms of like 3 years.
So the first thing is you have to look at the way that I would look at this is I'd look at top line revenue growth for the next 2 years, right? So what have they been CAGRing at? I mean, you definitely want to put some natural slowdown in there. So first, you would just do revenue growth over the next 2 years. You would look at an EBITDA margin that these guys have historically got. What is the EBITDA margin that they have? Because EBITDA margins rarely fluctuate significantly, right? Use the EBITDA margin, then figure out, okay, what is the share count going to be at the current pace of their current buybacks, and then just look at the leverage. Like, okay, are they planning on, like, from their earnings, how much are they going to be spending in the next couple of years on capex, and if there's a point where capex slows down. And I think that's the key, right? So if you look at 107, yeah, I was going to say 17. Yep. That's exactly right, and that's where you'll
Actually,
eventually
they
get
already
your
did say
targets.
what they're going to grow at. So then 18, let's just say 16, and then 15, and then 12. Which see that drops off there. And then tax rate, margin. I don't want to make assumptions with that one. CapEx. Oh, I can't make changes to CapEx.
Now you got. This is why fiscal AI is not good at this modeling thing.
Yeah, I was talking to a few guys there, and they have not looked at improving this right now. But yeah, they definitely need to do some improvement here because you can't even like change other stuff here.
Yeah, I mean, this is where you just got to do Excel, baby. Excel spreadsheet time.
Excel. All right. Well, think that's about it for Meta. We got to move on. What was the next topic we were
Novo
going
Nordisk?
to?
Is it going to recover?
Yes. Yeah. Let's talk about Novo Nordisk. I want you to educate me on this.
Shit, bro. The market's been educating me. So I'll educate you.
It's gonna educate a lot of people. There's a few people who are starting to get bullish this thing, trading at like the lowest valuation it had in like 5-10 years.
Well, the thing is, their GLP-1 franchise is being challenged by Eli Lilly. Eli Lilly's taking market share. But I have to remind people that the pie itself is growing, right? So it's not a limited market. So the pie is growing for Novo Nordisk as well as Eli Lilly. The thing is, the way that the pharmaceutical industry works is that usually the drug that's best in class tends to, really outshine the other one. Now,
maybe that's why they're buying Metsera.
Now, yeah, that's right. So there are other companies out there that have these GLP-1s, or they have other versions that are not necessarily GLP-1s, but have same kind of efficacy results, or even better efficacy results with better tolerability. That could be the next blockbuster. So a lot of them are paying to basically not get left behind. And so right now you've got Novo Nordisk, who's like, okay, we're getting our biggest seller, which is Wegovy / Ozempic, is getting its ass handed to it by Mounjaro. We need another growth engine, right? So right now Eli Lilly is trading as super cheap, but the reason why it's trading super cheap is because its core franchise, the one that's made it so much money in the past, is basically getting disrupted. Now, does that mean that there's no value in Novo Nordisk and they're going bankrupt? No, absolutely not. There's value there. The challenge is, what is the price that you would be willing to pay for Novo Nordisk, and what are some of the things that Novo Nordisk is doing in order to basically reaccelerate growth? And that's the play here. If Novo Nordisk eventually gets its growth rate back, it'll get back to its all-time highs again. And there's a possibility of that happening in the next couple of years because of recent developments around its oral semaglutide product. So one of the things that Novo Nordisk and Eli Lilly have, in common is that right now you have to do a once a week injection for both medications for GLP-1s. The challenge is a lot of people hate needles, right? So even though it's a really small injector pen, it's, there are people who are just not going to take it. Not to mention, in order to basically move this medication, you have to store it like in a cold place. So, trying, and then you of course have to have all these pens and you have to do filling on them and all this other stuff versus just printing pills. Making pills is super, super cheap. So if you're able to get the same efficacy results as the once a week injection and instead have once a day tablet, a lot of people are more likely to get on the tablet, and you could price it in a way where the cost of making it is so low that you're getting pure margin off of it. So oral semaglutide, if it gets approved by the FDA, could do really, really well in re-accelerating Novo Nordisk's market share and growth. Eli Lilly has also an oral product, but I don't know if it's got the same efficacy as semaglutide. So that's something. So right now, this is a head-to-head combination between the two right now. So
let me tell you something. This is the stupidest thing. How like Novo Nordisk and Pfizer are fighting over Metsera when you have Viking Therapeutics just like chilling at way below premium.
No, the problem with Vikings is that if you look at the data, they have a very high discontinuation rate. So the amount of patients that are able to tolerate this medication is a lot less in Viking. That's the challenge. It's not just, hey, are you going to lose weight? But dude, if you're going to lose weight because you're throwing up every day, I'm sorry, that's a lot of people are going to say after a month and a half of using it, saying, I'm not good for this. I'm out.
So the drop-off rate wasn't extreme. Okay, yes, they did drop off after about 6 weeks. The drop-off rate, I think, was about like 20% or something. Actually, no, I think it was like about 27%. But the thing is that, well, they have the new trials that are going to show up during their conference and presentation coming up soon. But also, if you looked at, man, I want to pull up that chart. If you look at the drop-off rate for Novo Nordisk, Wegovy, and Eli Lilly, it was like maybe like 5% difference. But also the dosage of those and the concentration was actually lower than Viking Therapeutics VK 2735. So what's the answer? Lower the dosage then. And I think that they did increase the dosage, but because like they wanted a higher efficacy rate. So then that's why they did have a much higher dosage. But at the same time, like these are like little things you could change. I don't think there's anything wrong with the medication itself. I think it was the dosage. And then also when you think about how much these companies are willing to pay for Metsera, which is not as superior as Viking Therapeutics semaglutide, it makes no sense why I even have a chart over here. This is Novo Nordisk had a $10 billion offer for Metsera, right? And originally Pfizer had an $8.2 billion offer. Okay. Yeah. And now we've heard that Pfizer is putting together a counter offer that's even higher. So the thing is that $10 billion is more than what Viking Therapeutics would be at a 200% premium. Okay. Way more. Because right now, Vikings Therapeutics is trading around here. It's 4.229 billion, 4.29, right? Yeah. So originally the offer was for like less than $8 billion, which would put it at 150% premium for $20.65 a share for Vikings Therapeutics. But now it's more than 200%. So Vikings Therapeutics has a comparable brand, which I think is actually better based on results that I've seen. Vikings Therapeutics should be like an $80 stock plus, but it's trading at less than half that. And I think one day, and I don't think it's going to take long, you see these two companies battling for Metsera. I think one day either one of these two are going to say it, or the Lilly might say it. Like, let's just buy Vikings and let's just decrease the dosage, and we'll pay like 150% premium. I don't know, like when I see like certain things like that, it makes no sense to me why that's the case. But every time you've seen the bidding up for Metsera, you've seen Viking Therapeutics go up because the market's looking at Vikings. It's like, hold on a sec, this is a comparable product. This is probably going to get a good bid too, since these companies are going at war to buy this product, to basically take over the whole brand, right? So that's why I think Viking Therapeutics is a buy, because of that, not because of the fact that it's like, I feel like someone's going to buy it, but the fact that if Metsera is going for 200% plus premium, that means that the price targets of Vikings Therapeutics compared to analysts on Wall Street is like around the $100 range, right?
Yeah. So
and I'm not saying that Wall Street, right? I'm just saying, like, I'm looking at the data myself. Like, I don't know why it's trading so cheap comparatively to Metsera.
So JS24 he asked a really good question, but then he missed his own, like, the idea in it. He said sub-Q injection is far superior for absorption. Absolutely true. Sub-Q injection is definitely better. The challenge is not everyone can tolerate sub-Q injections. A lot of people are still scared of doing that. If you're
Vikings
telling me
has an oral one.
Obviously, no, that's what I'm saying. But that's no. You're absolutely right. But that's what I'm saying, that the next generation of GLP-1s isn't just like, oh yeah, we're gonna stick to sub-Q for the rest of the time. You know, people and patients, they want other options. If you were to tell me, hey, listen, I can take a shot versus I take an oral medication, you know, for me, I am not a big fan of needles. I say I'm more on the side of taking pills. And not to mention, from a margin perspective, you're not having to do auto injectors and all this other stuff. So it's not just about efficacy of the medication. It's also about tolerability of the patient to the administration of it. Though, if you can tablet this thing, you can produce these tablets on mass, and at the same time, getting people to take it is going to be a lot easier. Like I said, it's all about what the total market potential is. If what is that thing called? Total market potential is based on that administration. There are still a lot of people that are not going to take this stuff because they're scared of needles.
Yeah, no, a lot of people won't take it. And for what I heard, and you mentioned it too, the needle's so small, like you don't even feel anything. But like people just, even me, like I'm not a big fan of injectable stuff. Like I still cringe when I get a freaking flu shot at the doctor. Like I can't.
And JS says, I hear you, Chris, but you said oral is just as effective as the daily pill. So that's the other thing too. From an absorption rate,
it's not.
No. So no, he's right. From an absorption rate, that's correct. But the thing is, you're not using the same dose. When you're using the oral, you have a much higher dose that you're taking. So even if absorption is poor through the gut, if you put enough of a dose in there, you're going to get the same amount that's in there, you know? So needles have better effect than pill or cream form, at least for testosterone. That's for sure. And that's the thing. There are, once again, some people can tolerate the needle part, and some people are going to want an alternative. And the thing is, the efficacy that that Novo has shown on its oral version is like 15% of body weight. So if you're telling me, hey, listen, you know, you lose 22% taking the needle, or you lose 15% using the oral, a lot of people opt for that oral too, you know, and just say, hey, listen, I'd rather take the oral and over time lose the weight. The other thing is also, from a maintenance standpoint, I think some people are going to say, you know what, I've lost enough weight and now I need to go on a maintenance regime where I don't want to take the needle anymore. I could just take the oral and maintain the weight. That's the other challenge that you run into with the semaglutide products, the GLP-1s, is that if you get off of it, you gain the weight right back. Like if you look at the rate at which people gain the weight, it's crazy. So what are you going to do? Are you just going to stay on the needle for the rest of your life? No, I think some people are going to say, you know what, I've lost the weight, I want to keep it off. I can tolerate the pill. Let me take the pill. You know, like I said, this is all stuff that it's better explained, I think, not by me and Sam, because me and Sam are tech guys, right? Well, not tech guys, like finance and tech and all this other stuff. When it comes to pharmaceuticals, you really have to have someone, especially who's a pharmaceutical investor, chime in their opinion on this. I think that there is a market for the oral that the market, I mean, that basically Novo Nordisk is going to be targeting, and some of these other guys will target it as well. That could be a re-accelerant for growth because it expands the market for GLP-1s. And I think that's my bull case. I'm not necessarily trying to figure out which one is best in class, which one's going to gain market share, which one's going to do this, which I'm looking at purely what is the total addressable market growth potential if they were to release a product that has an oral version that has, not the exact same thing, but close to the goals that you're looking at. And what is the gross product cost going to be? I mean, the other challenge that you're also running into with Novo Nordisk is from a pricing standpoint. Like the president is saying they don't want to pay $1,000 a month anymore. How do you deal with that compression?
So this is going to be interesting seeing what the announcement is tomorrow, because that's going to move a lot of these pharma stocks. So we'll see. But we already know the president wants to make these drugs cheaper. So I think Novo already, no, Pfizer agreed to list it on the TrumpRx.com. So did Eli Lilly. So if Novo does it, I mean, honestly, they're a target for the whole tariff stuff. Since most of their plants are outside of the US, you're going to see a bid up on the stock if that happens.
Novo's also got plants here in the US too. They bought a couple of plants specifically so that they can get around the tariffs. Right.
Yeah, so I know, but anything that gets imported is going to be tariff. So, whatever's not imported. So yeah, they're building plants, but like they haven't fully built it yet. But like honestly,
they've already started production of the oral here in the US.
Yeah, but
hold on one second. Novo.
Either way, the sentiment is going to shift if they announce that they're going to list it on TrumpRx.com. Holy snap, man. The freaking heater is blasting on my face right now. I'm wearing a sweater.
Yeah, right here. They already they're trying to get ahead of this thing so much. They've already can you share my screen right here?
Yeah, I just had to turn off the heater.
Yeah, right here. Hold on. This is all the new data that's out there, but right here. Novo Nordisk oral production centered in North Carolina facility in Durham for emerging technology, oral finished products and large API facility in Clayton. These sites handle manufacturing of the oral product. So they're not even waiting for the approval. They're like, we know we're going to get approval. Let's get this thing rolling. They're already producing it. So this way they're not going to get caught with their pants down like they did with Ozempic.
Figuratively.
Figuratively. Yeah. So here's what happened to Novo. They have Ozempic come out. It's a blockbuster hit, but then like there's a shortage of it. So what happens? The compounders come in and they say, "Oh, there's a shortage. We can make this ourselves." And then they got into the market and they were able to retain it. So these guys are like, "No, before we even get approval, we're gonna get this thing running." So I don't know. I got to talk to my sister-in-law. She's an endocrinologist. She might be able to give me a little bit of what is that thing called? A background on these things, on like what the likelihood is that she'll prescribe oral versus this, and then
I gotta be honest. I mean, it's an attractive valuation, but yeah,
there are other things that Novo has for it also. So Novo Nordisk signed a exclusive deal with CVS, which is the largest PBM in the country. So anyone who uses CVS Caremark as a PBM, or their insurance company uses CVS Caremark, they can only get GLP-1s from Novo Nordisk. So that's another thing. So that's like a protective moat around the franchise. I mean, they probably had to give a huge concession to CVS Caremark, but right now, if you want to get Mounjaro from let's say from your insurance company, from your doctor, they will say no. You'll have to get Ozempic.
Ozempic, baby.
Yeah. So sometimes Novo Nordisk already has semaglutide called Rybelsus, but the issue is what percentage will be effective for weight loss. That's correct. And that's the thing. Like the higher dose of the semaglutide is what the data is supposedly bullish on for these guys. So like I said, this is something that you know what, man, I think this is going to be I always say this, but I hate investing in pharma. Pharma has so many.
Pharma's tough. Yeah.
Pharma's like one of those things that's like, it's a hit or miss, and there's really no like steady Eddie for the rest of the time. Like, it's not Google, it's not like Microsoft. It's always, you've got patent expirations, you got competitors, you got regulatory issues, you've got like insurance issues. Like, so many things can go wrong and sink your business. I mean, look at Pfizer. Look at what happened to Pfizer.
I know. Yeah.
So
that's one of the reasons why it's Vikings is the only pharma that I'm in. And it makes so much sense to me. So I don't think I'm gonna be wrong. I have not been wrong for the last couple of months.
yeah.
So I mean, we'll see what happens with that. This valuation makes no sense. I mean, this is kind of different, right? So in sense of pharma, like this isn't like one of those crazy biotech stocks that are just like $10 million or $100 million something. This is like a $4 billion company. So it's definitely not a cheap company enterprise market cap wise. But they have a good product out there. So I mean, but it can go lower. Like you never know if like with these pharma companies, like you could just wake up one day and like it'll be down like 50%. Right.
Yeah, I know.
Like, that can happen. Like
I know.
Novo is not really like the likelihood of Novo dropping down 50% is like very low.
Whoa,
Like,
what are you talking about? It is down 50%.
I know, but like you
you
weren't like buying it when it was like $100 or anything, right? You were buying it when it was like $58. So okay, you lost like 20%. All right, not a big deal, right?
Yeah.
But like, some of these other like Sarepta SRPT was down like 40% from its earnings, or like you saw QURE. I forget his name. Forget that name. I know someone who was in that one. Like they got decimated from that one. It's like, yeah, I mean, like this is what happens in biotech, right? But this is part of the reason why I stay out of that sector, right? Like it's just I don't really understand it fully because that's why I'm only in one biotech position. Because
I think we need to make a new rule. Yeah. No more biotechs. Like, get the hell. Let's just stay the hell away from biotech.
I'm not a huge biotech person because of that. Like my buddy Logical, like he tells me about the stuff. Like he made so much money off biotechs lately, and just like I don't know. It's so like he knows so many things about it. It's like I don't know if I understand it, and like I'm going to stay in my realm. Like I'm going to stay in tech, and even if we have a massive bear market, like I'll navigate my way through that. But it's just like I would rather not focus on that to try to learn it and just stay in the things that I already know. Yeah, no, it did. Vikings was like $45, and then it had a massive drop. It had a massive drop because of the trial that what we were talking about earlier with efficacy. With the drop off rate with its VK 2537, or I don't know. I forget what the exact number is, but yeah, like they had a job and they dropped like 50%. Right? This is an interesting one. ABCL. That's something that I was looking at their earnings last time it came out, and I think they just reported, right?
Once again, Abcellera is one of those companies that
they're reporting tomorrow.
One of the things like about Abcellera, let me just put it out there. Abcellera does not have a molecule in production right now. It's literally you're betting on this company to one day hit it out of the park. So just keep there's no fundamentals you can analyze with this. Yeah. The most you can do with Abcellera is same thing you can do in all pharma companies that are don't have products going. It's a pray and spray kind of situation, right? Where you're basically praying that they create a product and it hits it out of the park before they run out of cash. You
know why a lot of people like this stock? And no knock on
it's
him.
Cheap.
No knock at him, but like this guy is he's taking he's taking two shots out of his gun and he's nailed both of them. So I mean, like I'm not gonna doubt it. Like I hope it runs. Like that'll be good. But a lot of people, and I'm gonna be real, right? Like they see someone's track record, and they think that well, if this guy's 2 for 2, there's a very high probability it's gonna be 3 for 3. And it's like it's not It's not really how it works, right? And I'm not saying that he's going to be wrong. I'm just saying that there are people who are in it because of that reason. So like I would, and even for us, like, right, it's like you got a lot of things, you got things right, and I got things right, but like
I got plenty.
I got a lot of things wrong. Like I got TOST wrong. I did. And the thing is,
I think you got TOST timing wrong. There's so many companies that you can get you can get right long term, but you can get wrong on the timing, and that's the tragedy.
This was before I got like deep into technical analysis. Like I literally got really deep on it just like a few months ago. Like I've always been about TA, but like I've really integrated it into my like swing process. Mm-hmm. And this should have just been a fucking warning sign right here. Like such a warning sign. Right here, you had the crossover the 20-day over the 50-day. Mm-hmm. And then it comes up here to test it and just falls off a cliff. And it's just like, man, if that was today, like I would be so careful. But this is bearish.
What does your technical magic say? Is it a buy now?
So what do my technical magic say? Is that I'm going to wait for it to break the 200-day moving average. That's what's going to wait me to say, right? So I have the spreads, and I'm not going to get too far in detail, but like I'm going to probably load the boat if I see a meaningful breakthrough of the 200-day moving average. I wasn't buying here. I wasn't, and I wasn't buying here. In fact, over here, I kind of sold a little bit because I married like some of the naked calls because it's just like it's opportunity cost right now.
Now I know why I ran. Now I know why I ran. Anything that Sam buys goes down. Anything he sells goes up.
Well, hold on. Like, so I felt like an idiot over here, but then I look at the chart. I'm just like, I wonder if it's going to reject the 50-day again. And it did. It did, right? But today, the day after earnings, which your earnings were freaking good. Mm-hmm. And look at it today. It closed above the 50-day moving average. So that's why I'm keeping an eye on it. I even sent it in the Discord too. I was like, look, I want to see this break the 200-day moving average. And then, I'll get in if it does. Like I'm already in, but like I will buy the short calls back. I will buy them all back. And that will put me like really having the position like out of nowhere. But I want to see a meaningful breakthrough of this. And if it doesn't, then I'm okay, right? If it does, then that's a good risk reward right there. What would really make me uber bullish, because you see this curl up of the 20-day moving average. If this 50-day makes a golden crossover back up, dude, it is on. It is on. This is going to be the new tech stock that everyone's going to talk about. And look, you got a long ways up, buddy. And we haven't even gotten back to 2021 levels when they went IPO. Like, just, dude, can you just imagine that? Can you say, I know you're going to bring it up. You're going to bring it up. Go ahead. Bring it up.
Hold on one second. So one of the things that you're seeing is growth starting to kind of stabilize when it comes to software companies, especially like TOST. They're going to grow at this nice even pace going up. But then eventually what tends to happen is their growth rate starts to kind of moderate, and then it steadies off. So you see that steadying off from 29, 28, 26, and now it's 25.8. Most software companies can maintain a margin, maintain growth rates between 20 and 30% pretty easily, right? From new customers, but then also from higher prices that they can charge from existing customers. And so seeing a 25% growth rate indefinitely is not that hard, especially for a company like TOST. And then when you think about profitability, because remember, your profits are your expenses are going to stabilize, but your income is going to go the other direction. So you can see here in 23, they were losing $370 million a year. Now they're generating 239 million. So you can see their operating profit is growing. And then at the same time, you can see their margins are starting to go in the other direction as well. So let me see, PE, no.
For sure, dude. I agree with this whole narrative, and my timing was terrible. My timing was so bad with this. Like, I thought that was it. I thought it was going to make the inflection, and momentum did not give its way. And I wish I already had established. Oh, go ahead.
Look at this. Look at this EBITDA margin that these guys have right here. See that?
Yeah.
-12 to now 5%. And this EBITDA margin is going to keep growing all the way into probably like the traditional businesses that operate in the same space. Like if you look at FiServ currently, it's like a competitor to these guys. FiServ's EBITDA margin, let me just show you, is, and EBITDA, and they've been able to maintain this for a long time, has been roughly, let me just do historical, sorry. Is the wifey sick? Wish her well, brother.
No, she just called. Go ahead, and then I'm going to show my tweet. And
look at the EBITDA margin. Goodness. Look at the EBITDA margin for FiServ. I mean, some of this was just them like going a little too hard on customers, and customers started to say, hey, what the hell is going on here? Like, you can't keep charging us. We'll go to your competitors. But I think TOST will eventually get to a point where they're doing 30% EBITDA margin. So if you fundamentally look at this company growing at, let's say, 20 to 25% for the next 10 years, and then you gradually increase the EBITDA every single year and get it to about a 30, bro, you're looking at a business that's gonna do well. It's gonna compound the crap out of it. And right now, what's the market cap on TOST?
It's not cheap. It's not. It is
28 billion. It's 28 billion.
It's not. I hate using cheap because like that has a different connotation to a valuation. But like $28 billion is not it's a mid cap, right? It's not a small company. But this is from their last earnings, which I thought were really good, and it was justified. It was up 9% today. So because it's a software company, they have ARR, right? You have annual recurring revenue. You basically take how much clients are contracted for, and you extrapolate that into the next 12 months or the previous 12 months in this case, and that's its annual recurring revenue. And they're increasing the amount of locations that they have their services and products in, right? So they also have gross purchase value. I forget what the P stands for. That's basically all the transactions that runs through all of their payment processing, and that's growing at 24%. And I don't know why I did not list the growth rate here, but I think it was like around 24%. I believe that they are actually guiding. Oh, they did not guide, but adjusted EBITDA for next quarter is it's not as high as this quarter, but that's because of the comps. But the entire year, this is actually an acceleration in and that's the reason why they went up, because of their acceleration.
So what's funny is FiServ's EBITDA is about 9.3 billion, and their market cap right now is 35 billion. The challenge, though, is that if you look at from a debt perspective, FiServ's debt is about $28 billion, right? So if you look at this from an enterprise value standpoint, FiServ is super, super cheap. But one of the reasons why it's so cheap is because it grew their EBITDA margins on the back of constant price hikes. And because of that, their EBITDA grew like crazy, right? So their EBITDA grew, and their EBITDA margin is almost 45%. So now the customers are saying, hey, listen, we have other competitors out there. There's TOST, of course, and then there's what's the thing from Square, from Block? I forgot the thing that they have. But
Cash App. Oh no, wait, they don't own Clove.
No, Clover is owned by FiServ.
Yeah, I know. I was gonna say that. Now you're starting to tempt me, dude. Now you're starting to tempt me.
So what happened is, in this guidance, FiServ staff, like their new executives, said, look, we need to dial this back. So what does that mean? That means that we can't milk our customers the same way that the last CEO did. The last CEO, they took their margins and put them from like 34 to 45%. So they were like charging the crap out of their restaurants.
I like how you call yourself. I like how you call yourself in that one.
And now all of a sudden, the company's like, hey, wait a second, like we can't do that. We're going to lose market share. So they're rolling back a lot of the price hikes. Now, what does that mean? That means that their future guidance is going to get cut. But I think eventually they're going to get back to an EBITDA margin of about probably 37% roughly, which is not that far off from where they are today. Right now, they're about 44%. Eventually, they'll probably get to about, let's say a nice 35%. So if you're looking at 35% EBITDA, and then like you just model out like 3 to 5% growth, which is what they've been growing at in the past. Right now, they're trading at, look at this, on an EV to EBITDA multiple like 6.8. Okay, this is the cheapest this company has traded in history. Okay, and these guys are like the what are they called? The backbone of some of the world's largest payment infrastructure. So it's not to say that this company is the greatest company on the planet, but if you're telling me that the EV to EBITDA in this can't go back to at least 10, you know, and then if you just multiply their EBITDA, let's say they took from their top line, the EBITDA gets hit and their EBITDA goes down to like 8 billion. Okay. And somehow their EV to EBITDA goes up to about 10. You're looking at 80 billion, right? So it would be $80 billion of what is that thing called? Enterprise value. You back out the debt, which is about 30 billion, right? You got yourself a $50 billion market cap company. And then if you look at their growth priorities to start paying down some of that debt while still keeping their share buybacks intact, right? Because this company generates so much operating cash flow that, yeah, they could probably cut back on some of the buybacks and they could focus on some of the debt. Dude, their debt right now, the servicing cost is 5%. So it's not like they're like, oh my God, we need to pay this debt off. There's only 3 billion that's coming due in the next 2 years. What does that mean? That means that they could probably pay 3 billion off in the next 2 years, use the other 8 billion from ops cash to buy back shares. And at $36 billion market cap, the share count goes down by almost 20%, which means that the earnings gets back to at least $9 a share. Out of 10, let's say 12 PE on this thing. Historically, it's traded around like 15 to actually more, like 20%. This thing could get to 15. At $9 times 15, you got yourself, what, $140? That's a double in a couple of years. So the margin of safety on this thing is super high right now.
Yeah. I got to check that one out.
Yeah.
I don't know about Novo Nordisk. I don't know about Novo Nordisk.
And Elaine, Square. So block, the thing is called Square. She's right. So Elaine is correct in saying that Toast has a better POS system. Totally agree with you, Elaine. And that's one of the chief complaints that that a lot of people had to the FiServ what are they called? The FiServ folks. And so right now, one of the things that you're seeing is more CapEx coming in from FiServ to kind of redo some of their core what is that thing called? User experience to make it more seamless. And so if they're able to kind of switch that up, one, they'll reduce down the amount of churn that they'll have from their existing clients. And the other thing is because they have so much margin, they can actually win back some of their clients from Toast by lowering their prices. So not to mention the switching costs are very expensive to go from one POS to another. So a lot of businesses, they just live with their POSs. So yeah.
Yeah, man. All right.
One thing before I let you go. This is a clear example of how short-term thinking by management can open the door to competitors. If you don't price your product and you don't reinvest in the product because you're focused more on shareholder returns, you are sacrificing long-term value. And I think that's one of the things that you have to take into consideration when you are a CEO. The CEO of FiServ, he was on his way out. So he did everything in his power to maximize shareholder value, but he sacrificed long-term value for shareholders. And that's what's hurting FiServ right now. I think it's an overcorrection, to be honest with you. But literally by charging clients so much and not reinvesting in your POS system to make sure it's the best possible POS system, you left your door open for guys like Toast to come in and disrupt you.
Well, disrupt be that may. But I don't think these guys are going anywhere. My problem is that value is not in favor of the market right now, and I don't mind to wait. I don't mind waiting.
Yeah.
Until it could become in value very quickly. I'm actually starting to think about buying or adding some stuff to the long-term port for some value stocks right now because some of it's getting pretty egregious. So FiServ might be something I might add considerably or DCA into, but like a trade is just so difficult to do right now with the timing because low can certainly go lower. We've seen that many times, and you never know. The timing has to be right in this, but I don't know if you're buying spreads that expire in 3 years, maybe it's not such a big deal.
Yeah, I mean, look, the position that I have in FiServ,
No,
don't. No, I'm not gonna say what it is, but I'm saying it's way out into the distance. I know that. Listen, this is not a V-shaped recovery. This is not a UNH kind of situation.
This is not going to wake up one day and be like 10% up. I don't think this is the kind of stuff. But who knows? Maybe because of the fact that we don't think it is the reason why it's going to happen.
Even management has very plainly said, like, look, 2026 is going to be a trough year. Okay, we are not expecting.
That's what UNH said.
Huh?
That's UNH. That's what UNH said.
But then the market got stupid because Buffett bought and rode this thing all the way to 370, and now UNH is back down to the 320s.
Yeah.
I mean, and that's where everyone who's on the Discord and the Patreon, we killed it by downshifting. That was the smartest move ever. That was like I was telling everyone, bro, if you got naked, cover that shit ASAP. ASAP. Please, for the love of God, cover it. If you've got the 500 calls, bring those fuckers down to 450 because I did not think that this thing was gonna keep going at the rate that it was going, no matter how much anyone was telling me next. No, bro, this is a very, very regulated industry. They are not going to get back to 500 and like that. Not going to happen. It's going to take time, and eventually they'll be able to get back to where they need to go. But yeah.
All right, dude. That is about it for me. You're welcome. Hopefully you guys enjoy this content. So guys, reminder, I'm going to be streaming the IREN earnings tomorrow. I'm probably going to go online like around 3:30 p.m. Eastern. So I'll be on then to start off early, kind of go over what we're looking at and stuff. And then I'm probably going to be on there for a couple of hours. So hope to see you guys there tomorrow. Mr. Patel, enjoy being on I enjoy you being on here. It was good to catch up for a little bit. Obviously we talk a little bit offline, and there's no censoring when that happens over there. So, that's free game off the phone. But I'll be honest, whenever I talk to Chris on the phone and stuff, like my kids are always around, like just screaming left and right and stuff. So like, it's not really anything I want to stream. But yeah, he has to suffer. Uncle Chris has to suffer a little bit through that. But yeah, appreciate you guys being on here. Thanks a lot. Chris, any last words?
Yeah, just anyone who's right down like over the last month because the market's gone absolutely like, oh my God, risk off, bro, just chill. The fundamentals on most of these companies is good. If you're a fundamental believer, just chill. We've got the Santa Claus rally coming. The Santa Claus is coming to town. You just gotta weather the next couple of days, let earnings get out of the way, let the whole government shutdown get out of the way. Everyone who's not getting paid right now, they're stacking cash because what's going to happen is they're going to get that pay in back pay next month. And the first thing they're going to do is go out and blow it in the economy.
Buy stocks.
So buy stocks. That's right. So I can't say 2026 is going to be the greatest on the planet, but I can say Christmas is coming to town. And so, yeah, that's what I'm going to say. I say if they're great companies, just buy them and chill.
Appreciate it. All right, guys, it is late. It is super late for you. I'll talk to you guys later. Take care. Recording's available. I'm going to post a timestamp after this.